closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment as we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the charts because time is of the essence and of the mind. Here we go. Let's go. We're in these channels as we've been showing for the last, I don't know how long, 3 weeks. So it's pretty cool. Check it out. Go back and check again, these pitch fans. Let's go straight into the heat map. What is the heat map? It's when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss and get repossessed and taken away.
Fatality.
So let's see who got burnt to a crisp today, shall we? So they're coming up on these bubbles that we pointed out yesterday. We were talking about it when it was back here, saying that we're not considering a long at all until they clear these bubbles. And we still do have some bubbles down below on the 1 minute time frame. These little bits of happiness that have stacked up quite nicely down here. As you see, there is nothing but soup above and some nice thick noodles, almost stacked too much. You might even choke on them if you try to slurp up all of these. Could you go and grab all of this? I have no idea. There could be more than enough bubbles that start to open up as it goes down, and they can trap some shorts off the liquidity here. You got to watch it like a hawk to see where that occurs. Let's reload this really quick. How y'all doing today? Saw some crazy news about BTC's white paper hidden in Apple devices. Somewhere deep in the system contains the white paper. Interesting if true. A head scratcher for sure. Interesting. BTC's white paper. Good morning everyone. So let's go back. All right, so we're seeing a slight bounce here, most likely some sort of inducement. You are getting some bubbles that are opening here in shorts, which they came back to a little bit. If we go back here on a minute scale, they opened up some 100 million shorts, which they came back and gobbled up these late coming shorts to scare out any potential funny business from shorts trying to take this ride down. And they're trying to do that again with these guys here, and you're getting some more longs open up as well, trying to see if there's this bottom. They're bottom feeding, sniffing people. We're like that too, so we're trying to be more accurate and detect on a different scale, shall we? So if you're seeing these bubbles get knocked out, that could spawn some juicy divergence. If you don't have high block, one other tool you can use, which is going to lag up my stream, so I'm not going to load it, but you type v3.aggr.trade. What this is going to do is show you an aggregated exchange of 18 different exchanges and liquidations as they occur. So you can watch these large players get knocked out and the divergence spawn off their repossessed money. So that's what we're waiting for. We're waiting for some sort of liquidation event which creates a divergence which we can ride to the upside, hopefully in conjunction with a bunch of shorts that open as they short the bottom. So yes, that's what we see. And we see the 2.42 billion short liquidity imbalance as we speak. So if it comes down to here, this will turn to 4 or 5 billion, and then you could see this reversal. We are in Thursday, midweek reversal on the weekly scale, if you will. So Thursday should see a reversal of some kind. Technically, we have been going sideways. If you look at this just solely within a range, we are going sideways. So the reversal would indicate something that breaks that structure of some kind. Will that be to the downside or to the upside? Let's look to the higher time frames to figure it out. Booyah. Coffee. Very good. Nectar of the gods. Interesting fact, the Age of Enlightenment also almost directly coincides with the importing of coffee and caffeine, because they could have philosophical discussions until late into the evening with the candles burning on both ends, which they couldn't do previous without coffee. All right, so here we go. On the 7-day time frame, you are reaching a small little pool that they could dip into here. They've been tapping it once and twice to get a billion here and there. There are billions down below in this region, 2, 4, 6, 8. Who do we appreciate? Divergence spawned off these liquidated guys, so they could come down into these 10 billion in long liquidity, and that could spawn enough to start to shift out. Does it go all the way down to 27,100 at 5 billion here? I don't know. It could keep going further than that, but in the 7-day time frame, there is this thick amount that is getting started to the upside. You are seeing an imbalance form just in the immediate pocket here, although the interest has been expressed to go grab this long liquidity down here. So this 10 billion here, it starts to get sparse at 27,450, so that could be what it needs to start to springboard off of that to grab what's imbalanced above. It has gotten thick, previously 4.6 billion, now up to 5.4. Only by a billion has it increased, but starting to look hotter slightly above. Let's go to the monthly time frame. What am I doing here by juxtaposing all the different time frames? Well, there are pools of liquidity, ladies and gentlemen, and they exist nearby and far away, and you need to kind of zoom in and zoom out. Go to 40 times magnification, 100 times magnification, 1,000 times magnification, back up to 20 times, and you're like a scientist going between the pools trying to see where the imbalances lie. And on this scale, on the monthly, it looks like the heat is being generated slightly higher above, up here at 29.4. It comes back to this 29.4 once again, still showing that imbalance directly above. You could go down below. You got 4, 8, 10 billion just in this region, which is why we're patiently waiting to see something spawn off of that, and another 10 down here at 27.1. Once again, 27.1 comes up again as a point of interest. So will they go down to here, and there's 21 billion in this region to 26.9. Starts to get sparse a little bit. By sparse, I mean less than 5 billion, 3 billion here on its way down to 26.4. So beneath the 27K region, the interest takes some time to develop, but you do have this caked up liquidity down below, which we cannot ignore in terms of stacked up liquidity. Let's not get our eyes too high on the prize. You do have, it looks like you're getting stacked in a manner above and in a manner below. Oops. So if you manage to take out these lows at 26.9 beneath 27K, you do have these double digits down below, which could start a cascading event down to 22K, which we were talking about as these pools start to thicken. So the narrative of a downside, a run to the downside, is not necessarily out of the question. They do leave these higher time frame pools to develop in more robustness as they retrace down in an abrupt manner. But yeah, that's something to think about. Let's go to the 3 month, shall we? Yeah, this is quite thick round down below here. Up above, you do have that short. That's why we were conservatively looking at 29.4 for that. But let's see. 3 month. Oh, just to be transparent, still not in any trade, just on the sidelines trying to wait and bide our time. So let's see, and still on that 17 streak, I don't want to destroy just yet, so we're being precise as we go. So the 3-month time frame starts to zoom out of the pools a little bit, and you see that heat. We come back to that 29.4. Now it looks juicier. We have 45 billion because we're looking on a larger scale. All these shorts, which we've been clearly aiming at as we go up, the pools over there at 29.4, which were 11 billion back here in February 23rd, they are all underwater. So there's 11 billion in short liquidity, which is underwater and developing more throughout this here, and 9 billion, 14 billion, 15. So there's 17 billion underwater from this point on March 17th. If they go beneath 25K, they are putting that 17 billion at break even. So as of this moment, they are aiming at that 17 billion, which is currently underwater. You could even go as far as to say the 19 billion down here are underwater. So, it should be even more, 23 billion underwater at this point. So they could be, if they don't go beneath that 27.2 region, they don't release that 23 billion they've induced on this 3-month pool. So that 29.6, 29.4, that's about $100 billion up here, just a hop, skip, and a jump away from the price. So if you just take away from the minutia of the 10 billion that's down here that they could be coming to get 10 or 20 billion, there is 100 billion just shining bright right above. So that's why we've been constantly saying 29.4, 29.4, 29.4, because this is just a hop, skip, and a jump away. However, you do have these happy campers, which we have been seeing build nicely here. So it has gotten to a point of 120, 180, 230, 270, 300. About $330 billion down here, sub 20K, that could be creating a gravitational point to come back to at some point. And you're starting to see this caked up region here down to 25 as well. So will they let this pool percolate and let them back to break even? Or will they spike up to 29.4, take out that that 80 billion or so that has developed since then, and start to consider going lower once they've knocked out some of these thicker pools? And that's why we keep seeing more upside, folks, because we have these pools that just continually develop to the upside, which justify the price holding its place and not coming necessarily straight back to this. Does this gravitational point come back, have a interest in coming back here at some point? You better believe it. But when these shorts start to wane, so when the shorts stop getting yellow here, or you take them out and there's no more yellow above in the immediate vicinity, then it'll just start gravitating back down. We still haven't seen that just yet, so we're seeing this sideways action as the short liquidity starts to suggest continuing higher as the imbalance. And you just got to we're looking at larger pools, but you still put it in a frame of reference that's nearer where the current price is. So how many people do they need to pay if they shift down here to 25.8, for example? All of these billions are getting paid in the process. So if I were a market maker, I would just spike up, grab these guys, say stop it, take them out of the game before we go to here, just in this immediate scale. So you have to discount this liquidity down below, not act like it doesn't exist as a gravitational point, but the amount of space you have to traverse to get there would be paying this 100 billion so much, does it make economic sense to leave them there when you're just nearby the price right there? Or does it make more sense to pump up and grab it? Today is Thursday. Once again, this is a full moon today. Does that mean anything? Not necessarily, but everything is a psychological point in the charts. It's all psychology. We are studying fear, greed, and ignorance, the three poisons you saw on the loading screen here. So these three poisons kind of trap us in reality and also trap liquidity into the charts. So studying those three poisons of ignorance, fear, and greed are the things that can take your life and account to the upside if you know what you're doing. So let's go ahead and move higher. 6 month. Oh yeah, I'm on a channel that allows coffee. Interesting. Yeah, if you're only allowed to have a certain narrative on wherever you're watching, you might want to consider, are you being brainwashed or in a cult? Do whatever you want. That's the way I feel. Do as thou wilt. There is no one way to be. There are many ways. The Japanese say Junin to iro, which means 10 people, 10 colors, or different strokes for different folks. Everyone has their own way, shape, and form for reality to exist, so let it be. So here we go, 29.4, 80 billion. We already ascertained that on the 3 month, and you have 25 billion at 29.1. So you just forget the minutia, just look here. You do have 13 billion at 29.6. Did we come back to 29.6? Not quite. So coming lower to knock out that 13 billion, I'm counting on it based off the bubbles I showed you in the Discord. And yeah, we were showing that from a long time ago, talking about these bubbles down here. And they've been slowly eating their way down there, but getting to the point. So 29.6, 29.3, we'll get into the Fibonacci levels as to where we could bounce off of, is 27K even realistically in the cards. It could be. Let's just give it a moment before we go to the fibs. Let's go to the higher time frame. I'm calling Elon. We need you on Starlink stat. Oh, you're talking about my internet connection? Is it stopping? Yeah, my internet is kind of garbage. Being on, what's it called? They advertise it being fast, but it's definitely not fast. It's 11 p.m. my time. There's no reason for it to be slow. So let's see what's going on. We bounced off some of this juiciness at 27.68 by the looks of it. No, did we take out that 27.68? No, because his noodle's still over to the right here. So we haven't gotten this 25x guy just yet. Just based off the sparseness, it's trying to induce some idea of a bottom to suss out the short interest if they scoop down, and suss out the long to see if more step in. So you're seeing some bubbles on both sides enter. Still got this guy underwater from up here that could be the target at 27.58. I'm counting on it based on the length of that volume right there from the black line. So somewhere in this region to scoop down into the 27.5 region, and a little bit below to spawn some divergence. Could it go all the way down? It always could. You never know. So got to keep a beat on the price. Oops, the 1 year's acting on the fritz. Let's go to the 2 year. Sometimes the 1 year does not load. I don't know why. Might be the internet. Yes, it's being poopy. That's too bad. Too bad. It's trying to load the high block, so that's probably it. All right, so on the 2-year time frame, that's a bunch of liquidity, a story of liquidity. So you have the 68. It kind of consolidates ranges into a $400 gap. So you do have 30 billion at 29.2, 68 billion 29.6. It kind of splits the pools so that 80 billion narrative kind of gets split up, but still a large amount above. Just below you have only 30 billion-ish. So if I were just betting from this immediate range, you can see clearly there's more here than here. So do we go up to grab this before going down? I don't know, but it suggests so. And then as you look above, you see all of these pools starting to cake up, which is surprising because we're starting to see more liquidity on the price going up to that 84 billion at 34.8. So there are pools above. We must not forget as we look at these pools below, even though there are 300 plus billion camping out beneath 20k, there's easily 300 billion camping out above 50k. So there are pools above pulling the price potentially higher as well on these higher time frames. So I'm not necessarily sold on it retracing all the way down to 20k. They could let those happy campers cash out as they bounce off the liquidity up here. There's always a chance of higher, there's always a chance of lower. Let's go back to the monthly where we can get a kind of balanced range for both. And then we will look at the fibs. Okay, let's see. Okay, so on a fib level, if we maintain this 236, we could see this upside. We've clearly not maintained the 236, so we could see more downside. What does that look like? Well, if you take a opposite trend-based fib tool, you could take it from the top to the bottom to the top, and that gives you a bearish idea and projection region for where it could go down below. And you see a 0.65 at 27.51, 706 bounce at 27.404. That coincides with this 236. This is kind of an old one, so I'm going to delete this, but it has proven to have some ideas within it. Can I use this? I could, but I'm gonna just delete it to clear up some space and get more accurate in the future. Okay, so just putting this out here right now so we can put this here at 26.82. So you basically fell to the downside here from this top point all the way down to this low point. You retraced back up. So if you cannot maintain this 236 level at 28.327, then basically these are the projections below, and you have some sort of idea down here that could occur to 26k off the bearish projection. This also happens to be a 618 of the external range here at 26.280 to think about if we start to come into these pools. Now the local impulse of this rising up, here, This is a retracement tool from impulse to impulse. It's showing the previous, we had a 618, we went into the 706 of that and started to consolidate, got rejection off the 236 of the bearish projection, and wait, no, that's the bullish. This is the bullish projection. This is the bearish projection, 236. So we're kind of consolidating, suggesting to go lower, as is the liquidity on the immediate locations we pointed out on the 1 minute time frame down here at 27.5, and this thick region below. You're creating these broth soup gap levels, but on the immediate you have these ones right just a hop, skip, and a jump below. I haven't changed my mind about that just yet. So we could come into my pocket here at 27.589 on that fib retracement tool. That would also be a 786 on this retrace. If you can't hold that, then you could think of a bounce on these potential targets on the bearish trend-based fib. If these lines don't hold, then you're likely to just go down to the 1 region. So if you're in a short and considering what to do, these are some ways to map out your progress using trend-based fib extensions. They work with the impulse and the retrace ideas. So on a bearish trend-based fib, you do the impulse to the downside. How far was that from high to low? And then you go to the retrace level, and it projects out a bearish scenario. And the 1 to the 1382 is a reasonable thing to think about if it continues below. Okay, so if we don't see a bounce within these levels at some stage, then we're going to go down to 26.8. Let's see where that is here. 26.8. Not really much liquidity here on the monthly. It looks like it kind of thickens up below 26. So I'm not necessarily keen to short right now. I'm just looking for a positional upside play to that 29.4 pool on the higher time frames. I'd like to see a clear entry. So that's about it. We got these zones on both sides nicely thought about over time. We've done this rise retrace idea here, which project out the 236, which we're currently rejected on. So until we can reclaim 28k, this 29.4 is out of the picture for now. So we would think about these things coming to these regions for that idea. Okay, let us see what we got to do. So
accessing data.
Wait, what? Hey, huh? Not again. Hello? Hello? Huh?
All systems operational.
Hello? 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 Whoa. 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 Echo. Ha. 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 Hello? 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 I see. Time, space, distance, and separation are but mere illusions, projections cast out of the 0 point energy in the 7th dimension. And there are 10 dimensions? Wow. And collapse through the quantum probabilistic foam into a spin up or spin down electron pair in the 5th dimension. And those electrons traverse back and forth through the 4th dimension as positrons? And only one electron created all of this? Wait. So that means nothing beyond you exists separately, and everything is a manifestation, a vibration of holographic probabilities, realizing itself on a continuum of self-driven momentum. I get it now. It's all self-driven momentum. Interesting. All right. Sorry about that. I seem to have been given some sort of heads-up display here. Let's see what we're looking at here. So we had 3 time frames overbought top of this channel, and then we started to come down. We had a helix and a bunch of offloading of volume across all these time frames. They spiked down and came down with a fury, and now we're reaching the bottom of these channels and seeing the baseline come beneath the price in an interesting manner with a helix cross to the other side, and starting to see some interest of buying across the time frames here. That's kind of interesting. Bottom of the channel. This is kind of thick, suggesting more resistance if you came up to this region. Interesting. On the hourly, it looks like you got the 4 hour, the hour, the 15, and the 5 minute basically in a good spot. The 5 minute getting overbought with the 15 here as you go sideways, which suggests a little bit of fatigue. Let's go to that 15 and see it in more detail. It is attempting to create this inverse head and shoulders against the cloud, which is still thick, which it has yet to reclaim. You're getting bearish divergence playing out. Are you trying to negate that with this wick whacking going on here? I don't know. It is currently getting above that cloud, but not thinning just yet. It would have to pierce and kiss if it were going to create a reversal idea on the 15. So before we come back to that idea and how it may or may not occur, first let's go to higher time frames. Yeah, that's kind of what's going on in my brain. I always see everything as this connected energy ball. It's kind of annoying sometimes, especially if, like, you could be doing much better than you are in that exact moment in time, and the resistance of the energy ball is working against you. That's kind of annoying. You're like, how can I get this to work in my favor right now? Why is it resisting me? So, on the 5 minute, we are seeing a thinning out of the cloud. It was attempting to reverse this out of this region, but this, based off the liquidity, I'm not necessarily buying it just yet. So they're trying to get some longs into the picture here with that potential. But if you just go off momentum, it's attempting to shift out of here in a momentous way. And you got the baselines crossing up, so you could see a 5 to 15 cascade if it goes above this ATR and holds 28K. Let's go to the higher time frame on the daily. So we had previously seen the rejection at the adaptive moving average on the daily for 1, 2, 3, 4, 5, 6, 7. The last week and beyond, we had those wicks above it, which sent us back down. We are at the top of the Keltner channel, an ATR-based Bollinger Band, which is more accurate than Bollinger Bands. And you could see these retraces into these regions to kiss the cloud down below. Those coincide with fair value gaps and liquidity pools below as well, so never be stuck on one narrative to the upside. You could come down into these pools. No guarantees. this could be suppressed by the alarming thing set in by the Williams here on the daily time frame. The last time we had that set in, we did see a pullback of 10%. So are you going to see that occur with suppression from the Williams onto the daily time frame? I don't know. So let's go to the 3-day. 3-day also closes in the next daily candle close. You are getting a cross down event, which if it closes in this state as it is now, that locks in and spells what exactly? Well, when was the last time we had one of those? Well, we had one here. It was kind of meandering here. We haven't really had one since this point in November, which dumped down there. I mean, you had these immediate ones, not as easy to read as other time frames in terms of the crossover events, but you are seeing the baselines above the price. So if you see this 3-day close in a bearish manner with this helix above and the cross confirmed, you could see a kind of dump down in and start to retrace into these regions. We are getting overbought on the 3-day. Okay, and going to the 5-day and the weekly, and then we'll start to go lower. Nice to hear. Always makes you laugh. I sing extremely well in the shower. Nice. I was singing Dave Matthews today for some reason. Always the springtime brings out my Dave Matthews Band thing. So I was saying, oh, could I have been a parking lot attendant? Or could I have been a millionaire in Bel Air? Or could I have been lost somewhere in Paris? Or could I have been your little brother? Or could I have been anyone other than me? Or could I have been anyone other than me? You know, I hope you know that song. It's a classic. Dancing Nancy's. Yeah, so I was just thinking about the possibilities of being somebody else in another place, another time. So the 5-day also getting above the price action here, closes in 4 days. So a lot could happen in those 4 days, not necessarily, but you are overbought on the stochastic RSI and the Williams. So something to note in terms of a pullback. So I'd like to see that 29.4 region get cleared a little bit higher, get that 80 billion out of the charts to see this becoming more juicy as a target for a short. But I'm not interested in shorting just yet, me personally. I'm chilling like a villain. Let's go to the weekly. So the weekly does have the adaptive up here at that 29.4 region, which is interesting, and we have yet to kiss it. So could we come kiss that adaptive like hitting a basketball rim, trying to show off to a girlfriend in high school, like I did it, and then fall down below? I don't know. So this might be something that you could consider. That confluence at 29.4 with the adaptive not yet touched. We are at the outskirts of the cloud, at the Keltner channel rather, and the cloud is still kind of thickening up, taking a while to reverse that weekly vibe. Previously took a little less to shift that out, but we've had lots of weeks of downside to stave off and curve. So that is an impressive feat to do an about face like that on the purpleness of the cloud without coming back to kiss it. We do have those pools below, those happy campers sub 19K we talked about when it came back down and retraced into this cloud, kissed it, if you will. That was a perfect 618 bounce off of that and that cloud kiss idea. Boom, we boomed to the upside. That's extremely bullish in terms of they didn't allow much liquidity into the charts, suggesting they want to possibly go higher based off the fervor in which they did that. So does the weekly want to reset? That is the question. You are seeing the average start to come up here. So I don't know. I'm not necessarily sold on a downside play just yet, but greed is getting high and those pools below have not paid themselves. So let's go to the 12-hour time frame. We could start looking below now, I think. Okay. So the 12-hour cloud, we were talking about it the other day when we reclaimed it and we saw a little bit of an upside play. We took that profit on that and then we didn't know, we were ambiguous around Wednesday and haven't taken a trade for the last day, essentially, day and a half actually. So we're watching the cloud thin on the 12-hour here, which is showing a sign of weakness for upside, and if it goes beneath it and bearishly retests, you could come into these regions. Just something to think about. The 12-hour cloud, we did see 12-hour clouds thin and weaken and bearishly retest down out of here before, so it's not necessarily an interesting thing to see us wane like that for upside plays. All right, and you're getting that suppression. You got about 9 more hours for this to close. The Williams has been holding sideways but slowly giving back as you attempt to go higher. So you were getting some previous from here. The bearish divergence has returned to a state of normalcy, but as of here you had some bearish divergence on the Williams, which started to play out, if you will, and reset this 12-hour and not let it come to fruition. And that's why you got that crystal locked in on the RSI as well. It appeared on the RSI. On the 12-hour we got some hidden bullish on there, and then it liquidity grabbed up and couldn't make it above, and now we're seeing this cloud consolidation idea. What is this indicator, by the way? The link is in the description, momentummaster.info. Scroll down to features and toggle the switches to see and read about each of the components inside. All right, so we go to the let's go to the 8-hour. It's been a while since we looked at the 8-hour. The last time we were looking at the 8-hour, it was thinning similar to what the 12-hour is doing now, and then we spiked below it, came back and reclaimed it. So that was interesting. I was looking at this thin and I was like, this sign of weakness, and then it liquidity grabbed out of the cloud and quickly came back above it. Now we're starting to see this idea of it right at the cloud. Indecision doji, an hour and 13 for this 8-hour to close. Also trying to reset some of the stochastic on that. I don't normally take trades or think about the 8-hour other than look at it occasionally, but something to note. Interesting. I know some people have pointed it out to me. That's why I look at the 8-hour. Let's look at the 6-hour, shall we? 6-hour has some volume entering and thickening up despite kind of having this intention of weakness. The volume is stepping up here, which is interesting, even though we went beneath the cloud. What is that about? That's kind of interesting. This was an interesting kiss to the cloud that went to the upside. You did wick around, double tap it first. Here you had a clear like manipulation type idea which came back. So interesting. not really getting some clear picture on that, but seeing the thickness on the 6 hour. The 4 hour getting thin and showing some sort of indecision here. If you look at the 4 hour stochastic, it has reset in a nice manner. The Williams at the 50 level could see a bounce. You've seen that before, where it gets to that point and bounces off the 50 region or just slightly below it. So the Williams doesn't necessarily need to reset 100%, although the ideal position for a long is when the Williams and stochastic are in a oversold status, and you could see those huge upside plays. So we're not necessarily in that awesome place for a super long or positional long with the Williams here on the 4 hour. But the stochastic RSI getting to a good place. It's basically unchanged from where it attempted on April 4th, Tuesday. So Tuesday we're at the same point in time with a lower stochastic RSI on the 4 hour, which is interesting to note. Let's look at the hourly. The hourly getting that rising sun potential. The hourly stochastic has yet to break above itself, so it could come back down for that pool below we were talking about on the 1 minute time frame. So this could come down. You are getting a double bottom on the Williams and a lower low on the price. Interesting, kind of class C Williams just yet. You are getting the cross up event and the scooping of the price on the hourly, similar to what you had here that closed completely. But in this case you had a less serious purple cloud. This is a pretty heavy contender for downside that would see some rejection to it. So I'm not necessarily sold just on this 618 bounce, but people do play these 618 plays, and if you had played it here you would have seen 1.8% gain, which isn't bad, and if you had taken this one you would have been able to see a 1%. So you could just play these 618 bounces of the retrace region. I'm looking for a more aggressive spike that I can pay myself over time, so we're being more precise with it. But yeah, you had this crossover event which locked in here, which didn't play out, and so you could have easily just something like this. You do have duds clearly within the crossover events, but they are a leading moving average formula, which gives you the front run of upside. We went over that scalp play on the ES. It was pretty weird. The ES, the S&P rather, we put out that M as it was up here, and then it followed it to a T, and we went over that scalp play, which would have essentially taken you that perfect short entry down here on the, I believe it was 2 days ago. You would have been able to scalp this up and take it down. Pretty interesting. So the S&P also getting in that oversold position, that suggesting a bounce of some nature, which would also bring a bounce for BTC. You're coming back into that 1382 region of the bullish projection here. So could we see this maintaining of the 1382? Let's go to the regular S&P. You could come all the way down to the cloud, which has thinned here. That would be your ideal kind of like play, but there's some gaps over here to recover as well. At 39.80. What does that mean? If it does that, that would be pretty bearish for BTC. It's a run for profit. Friday just around the corner. Let's start to clean up a little bit of this and see what's going on the hourly. Sometimes, because I don't care about the S&P necessarily, I can pigeonhole it quicker than Bitcoin because I'm not intending to trade it, and then it plays out like you just saw, and I haven't even given it as much thought, and it's because I haven't given it any thought that it just plays out the way it's meant to play out. You had the 6 time frames overbought, baselines above the price, the M formation just dumped on you, and you had this cloud failure on the hourly. So looks like you're attempting to come back above that hourly cloud, but you could bearishly retest back down out of here as you reset that 4-hour time frame. What is the 4-hour time frame doing? You're getting that cross down event, which is at the top of that channel. So coming down to this cloud region at 39.77 would not be absurd to think. Once again, you have a gap down here at 39.7264. That is getting the alarm on the Williams. You did previously have 3 alarms as you went up. So if you're breaking structure, which you did, you could see that double and triple tap and be ambiguous. It's not always a guarantee, but it is something to note certain pullbacks, which we did have. So are you going to see that reclaim kind of kiss of the cloud idea? That's what it likes to do. You had previous resistance, breakthrough, kiss, jump. Are you going to kiss it again? Are you going to go sideways and bring the cloud up to you? The 4-hour time frame coming down. Let's see the 6-hour. 6-hour also getting the alarm cross. You did have previous alarms as we broke the structure. Are we going to continue lower on that? Interesting to note. Why do we have the Williams and with the RSI? So sometimes you may have noticed the stochastic RSI to be less than reliable in terms of when it gets oversold like here, and then it doesn't really play out immediately, and then you see a lot of times the kind of suppression of the stochastic RSI, and that's because the Williams starts to, which is based off the probability of the price action. So the price action probability tells you you're more likely to have a pullback, and it can suppress the stochastic RSI from taking off. So looking at these cross down events, and at this level when the average is crossing its average at that level, it gives you that alarm. That's a back tested zone with this baseline, which kind of gives you the idea of a pullback as it occurs. So you start to think about that potential. If this opens up a little bit, this comes down with the fury. So something to think about. Could come down in a furious way to one of these adaptive or cloud regions. Let's go to the hourly. Shout out to everyone here. Are we still live? Doesn't look like anyone's on. Booyah. So you're starting to see the hourly potentially get suppressed here. Interesting to note, we were talking about this cloud kiss rejection and potentially come down here and reset completely on the hourly time frame because of the 4-hour. Let's look at the 15. You're seeing a thinning kind of rejection off the cloud continually. We gapped down, recovered the gap, continuing lower perhaps. Getting rejected off of the adaptive as well. Kind of bearish tones, haven't reclaimed the ATR. Could come to the bottom of the Keltner channel, which would coincide with this fair value gap and this fib at 786. So coming down to here to reset the 4 hour in some way, shape, or form. So this would be the bearish story for BTC as well, coming to fruition as they do the midweek reversal. They started the midweek reversal on Tuesday, interestingly enough. So could the reversal be some sort of drop to the downside before and then set up for Friday's run for profit? I don't know. I'm just going to play it conservatively, but it looks like it wants to come back into these regions, these fair value gaps created below. So let's just watch that occur as we go back to BTC. First, let's go quickly back to the dollar. Dollar kind of going through that projection. Still could be true. We reclaimed another fib level. I think this is the 786 region, if I'm not mistaken. But it's a struggle, and the 4 hours getting overbought. So this could chill out some more. You're getting that resistance off this previous support, and this happens to be that fib level of the 786. So if you close that, you are getting the crossover confirmation here. So you could close out that 6 hour in 2 hours a little bit strong above this 786 region, and then reset some of the lower time frames to go higher on the dollar as the S&P pulls back. But it's not giving extreme signs of strength, and you have this fair value gap up here. I don't know what that looks like on lower time frames. Let's see. Oh, you're still here. Nice, nice, nice. Good, good, good. Yeah, my internet. I really wish I had better internet. I have the best computer, but the irony of not being able to use it in its fullest potential. So, do we have that fair value gap region for the dollar? There's some over here if you just want to be playing that immediate range at 102.219. So you could come up to there. No, delete. All right, let's do that. So you could come up to here and kind of meander around before coming back down a little bit to reset. Some of the 6 hour needs to reset a little bit alongside the 4 hour. So as the pullback for the S&P arises, maybe you see this go up to one of these gaps and reclaim it, and then start to double top on its way back down for a double bottom on this region. So we did previously see those rocket ship take off for the dollar. It just did a little bit lower than we were expected. So that would be a cool, almost cool percent on the dollar. As the world, the BRICS and all the other countries try to flex on the dollar and say, we're not using you anymore, we're better than you now. If you haven't checked out a documentary, one that I recommend if you haven't is the Ray Dalio documentary. It's also a book. It's the changing world order. Principles for dealing with the changing world order. It's only a 40-minute thing, so it's not super involved. So this is an interesting idea about the cycles of how the money systems change and evolve and flow in 80-year cycles within cycles, and we're at the end of the dollars. Interesting to note. So I don't really have this extreme hatred for the dollar because it's better than a tyrannical system of the yuan of China or Russia, so I don't want to see the BRICS succeed. The BRICS are kind of like an axis of evil of sorts, so I don't really wish them success in any way, shape, or form. I wish them to fail hard on their face, if I'm being realistic, because who wants to see tyrannical regimes succeed? Not me, but I'll keep out of politics for now. Let's go to BTC one more time. But yeah, the money systems are fake and broken in general, so that's why we're into this stuff, eh? So we're starting to see that 618 bounce. I'd like to see it come a little bit lower. This is just one bounce of a double bottom, which could be a extended W down. So what do I mean by extended W? You create one to create the second leg out of here. So people buy into this, which creates the padding for that grab and also knocks out the shorts in the process. Let's go to the liquidation levels. Most likely there's 100x pooling up here for them to knock out and create that first leg of the W. We got to go to sub 15 minute to see it. Okay. So we're starting to see the attempt to pierce the cloud and reclaim it. Oh, you were looking at the book in the bookstore? Cool. Yeah. Start with the 40-minute thing. See what you think. It's pretty cool. Definitely worth a read, I would say. It came out before the conflict in Ukraine heated up. So he was talking about Russia and China challenging the order, and they are. So it's all just a cycle, right? So why is the liquidation levels not loading? Please load, as I want to see what is there on that free indicator so I can show you guys the freeness of stuff. Come on, load. There we go. All right, so this is a free indicator to show liquidation points. It is called liquidation levels by ML applications. So we are getting a bounce right at the 15-minute and 5-minute time frame. This is, you could put a 0.1 for the threshold, which shows every 100k trader out there, and it looks like they're going for the 100x here on the shorts, but also building a nice pool of 50x and 100x longs in the process. This is what creates those dynamic patterns for the stop hunt rise and drop to the downside for the longs with the long intention that they just refuse to close, and they say thank you, and they wham bam thank you ma'am both sides and create these effects of price action going up and down, and that creates a pattern, which is a psychological trick or trap for people to believe in an idea which is not true and comes to take their money. So it likes to take the 100x out first, so that's why we see these oscillations in this manner. and that's why we look at these pools. So we're seeing a pool at 2819 just off the immediate bow of the ship. 50x longs here. Let's reload this and see if it's where it's heading. That would coincide with this up to the 100x and then fade back down. It all depends on how many bubbles enter on both sides. We talked about the idea of a tug of war, and the one with more people tugs the price action towards the direction it doesn't want to go for their side, and so they win the tug of war and lose the trade. So I'm not in any trade at the moment. Once again, I'm just chilling, waiting for a level to reach my interest. I'm not gonna FOMO into anything. So let's go back if it loads. So in the immediate, that 2819 bubble could be their interest point here for the 50x and that 100x we're seeing on this. But ideally, you're getting more stacked up longs here on the 50x region here. They previously hit the 100x, came off their liquidity, so they're going to get the 100x of the shorts, which makes sense right now. And then where does it fade from there? Does it do it up here? Does it do it as it gets sparse here? And this is what you look for these double bottom scenarios. Midweek reversal once again. So let's go back to the S&P once more and see where that wants to go. I'm going to remove the liquidation levels, the free indicator. So you're getting that recovery of this fair value gap on the 5-minute time frame, a very small time frame. You do have the hourly in your favor for momentum. Let's look at the hourly real quick. Is this going to be an hourly scalp to the upside, trying to reclaim that cloud? Kind of weak on the stochastic. Williams could just curve on you and go down completely. You did previously have a green attempt which failed to do something. You are getting hidden bullish on the money flow, which is interesting. So you could be seeing people start to reposition to an upside play. This would coincide with the 29.2 region. So are we going down to go up? Interesting to note. Why does it do that? I like the security of Brave, but it doesn't make sense sometimes. So we're reaching the end of the road with the songs here. We got some front run divergence on the sub 1 minute time frame here on this formula that's still being tested, so that's interesting. So we did see that upside occur from that divergence. Quite fascinating. We're getting that rising sun potential on the hourly with the double bottom on the Williams. We pointed that out in the beginning. I'm still waiting. See, the thing is it's not bad to not be in a trade. So if I'm seeing like indecision or it's not clear, it's ambiguous, then I'm just chilling. I want it to come to a region where it's a clear liquidity grab, and then I can just bounce off the divergence with profit. That's the idea, right? So you want to just enter with no drawdown. So you want that instant beautiful entry. The 618 would have given you those bounces 2 times if you closed into profit. So even with no indicators, no math, just regular math of the retrace of the Fibonacci, You could have drawn this from impulse to impulse and seen those 618 1, 2, 3 times from there. Is this going to be a 618 bounce for real, or is this inducing more in? I would say it's slightly looking like inducement, but that's just based off of our juxtaposition of these pools. So coming up to get the 2819 guy perhaps before coming lower, I don't know. Let's look at the chat and then we will bid you adieu. I still think based off the liquidity that we are in the positioning a hit to 29.4 at some stage. Is that going to occur tomorrow on Friday or not? Are they going to do some funny business to knock out the pools below before they do that? Generally, you'd knock out the side before you go the direction you intend to. So they haven't made their intentions super clear just yet, but they are trying to knock out longs and scare them out in a furious manner. So are they trying to dip down into the pools to send it up to a certain region? I don't know. Let's look at the chat and say goodbye. Let's see. He had a great request to add some information on the webpage toggle to help explain the Keltner function. Yeah, at some stage that would be good. I need to find some time to do these type of diagnostic changes and graphic design things. I'm just coming off the spring vacation, like 3 weeks of trips and stuff like that, and now we just had our first days of class. Or if I become able to just not work at all, then I can work on that all the time. But little baby steps forward is all we can do right now. So I agree. There's no explanation for it. For the Keltner channel, it was originally not that useful. It was other members of the Momentum Master Discord that did find that to be useful. They were using something else. I don't remember the name of it. And I was like, hey, I already have something like that, you know? And then they started using the Keltner channel. So I tweaked it and made it more transparent and turned it on. The information is in the walkthrough though, so you can kind of go over it. It's just like a dynamic support and resistance thing that tends to play out if you get to the outskirts of it. And you need to mind the other time frames, of course, and whether you are on the outskirts of those time frames or in the center and could come lower. So going down to the outskirts of the 4 hour, it has a higher likelihood of coming back up, as you see on both sides of the equation. So yeah, following the Keltner play with the overbought and other components can help you out. It's fairly straightforward. I just don't. I spent so long on this thing. It was like 30 plus hours making this, tracing it over price. I'd have to go back and find the Keltner channel and what it looked like at that point. But yeah, I definitely want to add stuff as we go forward. We also added the helixes and stuff that weren't there before, the cumulative volume time frame delta and stuff. All right, well, we're gonna call it a night there. Do you guys have anything you want to look at? Last chance. It looks like there's only one still left with us, so on that note then, I thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will catch you on the flip. Peace. Okay.